Section 9, Best Real Estate Practices with Disclosure, Arizona Market Introduction, From Offers to Disclosure. In Section 8, we looked at real-world legal hotline questions involving HOA documents, fees, commissions, and transaction timelines. Now we move into one of the biggest risk areas in Arizona real estate, disclosure. Disclosure is where many transactions either stay protected or fall apart. A buyer may forgive a small repair issue, but they rarely forgive finding out later that someone knew about a major problem and failed to disclose it. In Arizona, disclosure is not just about being nice. It is part of good real estate practice, risk management, and legal compliance. Disclosure with lending financing. Disclosures are a major part of real estate transactions. RESPA helps ensure buyers and sellers receive disclosure of settlement costs. Regulation Z, which implements the Truth in Lending Act, requires lenders to disclose finance charges and APR. The Equal Credit Opportunity Act helps ensure credit decisions are made fairly and without discrimination. For agents, the best practice is simple. Do not explain loan terms beyond your expertise. If the buyer has questions about APR, finance charges, loan approval, or lending conditions, refer them to the lender. Environmental disclosure. Environmental issues must be handled carefully. Common disclosure topics include termites, scorpions, lead-based paint, asbestos, mold, and Superfund sites. These issues may appear in the SPDS, purchase contract, or other disclosure documents. Example, if a property is located within a Superfund site, that is not something to ignore or minimize. Licensees must disclose known material information and recommend that the buyer investigate further. The story, the roof, the loan, and the earnest money. Imagine a buyer is purchasing a home with FHA financing. The buyer qualifies financially, but the FHA appraisal requires roof repairs. The seller says, "I agreed to FHA financing, but I never agreed to pay for a new roof." The seller may be correct. Simply agreeing that the buyer is using FHA financing does not automatically mean the seller agreed to pay for all FHA required repairs. If the buyer wants the seller to pay for those repairs, the contract should clearly say so and should limit the seller's responsibility. This is a perfect example of why disclosure and contract clarity matter. Financing contingency and buyer notice. Another common issue happens when a buyer cannot obtain financing. If the contract requires notice 3 days before close of escrow and the buyer misses that deadline, the seller may believe they automatically get the earnest money. But according to the hotline material, failure to provide notice does not become a breach unless the seller gives the proper cure notice and the cure period expires. If the buyer provides notice before a cure notice is issued, the financing contingency may still protect the buyer. Best practice, do not make quick promises about earnest money. Review the contract, timelines, notices, and cure rights. Advertising mortgage terms. Advertising loan terms can be dangerous. If an advertisement states a specific mortgage payment, such as payments under $700, Regulation Z may require other material terms to be disclosed, including repayment period, finance charges, and interest rate. Best practice. Agents should avoid advertising specific financing terms unless the lender has provided compliant language. Disclosure to ADRE. Disclosure is not only about buyers and sellers. Licensees also have disclosure duties to ADRE. A common violation occurs when a licensee fails to update the licensure questionnaire after a criminal matter, judgment, discipline, or other required disclosure. Many agents avoid reporting because they are afraid of discipline. But non-disclosure can create a worse outcome than the original issue. Best practice. Disclose required information timely and honestly. Closing thought. Disclosure is the safety system of a real estate transaction. It protects the buyer from surprises, the seller from future claims, the agents from complaints, and the broker from supervision problems. Section 8 taught us that transaction details matter. Section 9 teaches us that known facts, financing issues, environmental concerns, and required disclosures must be handled openly and carefully. Online discussion question 1. Why should agents avoid explaining detailed loan terms to buyers? Answer. Because lending disclosures involve federal laws and lender-specific requirements. Agents should refer buyers to the lender for APR, finance charges, loan approval, and payment questions. Question 2. Why should FHA required repairs be written clearly into the contract if the seller is expected to pay for them? Answer. Because agreeing to FHA financing does not automatically mean the seller agrees to pay for every FHA required repair. Question 3. Why can non-disclosure to ADRE be worse than the original issue? Answer. because failing to disclose required information can create additional discipline and may lead to harsher penalties.